I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in today, futures are down a few points. Pretty, quiet weekend, so to speak, especially after what we saw last week, which was a 4 out of 5 day up streak in all different indices. So people weren't sure, okay, do we digest for a few days or do we just, go green and grind higher and look for more opportunities? And that's pretty much what took place. Markets opened down, I think somewhere by lunchtime, already green, and then just trended higher, led by the Dow. And it was pretty mixed, though. It wasn't like everything was going up. There were some trades that stuck out that traders have been looking for. So let's just go right to the charts. You go right to the spiders, and you will see that earlier last week, this is the level we were talking about on the SPX, this 1530.31. We broke above it, held higher, went a little sideways, and now look where we are at 1556. Okay, we opened lower. I think the low of the day was 1547, and we didn't even get in and retest any of the support and let the 8-day catch up. So market's moving, you got to move with it. You go to the monthly chart real quickly just to show you once again where we're entering. We're entering this area of this double top that goes sideways, okay, where you have a peak right here at 1576. And then you have another peak right here at 1550, and we'll see what happens. If it blasts right through, you're going to see a lot of people, probably in pain as the pain trade to the upside continues. But we shall see. Sometimes some sellers come out, sometimes they don't. Either way, lots of little things to do across the board. As far as technology, I'm going to get it into just real quickly. Apple had a little bit of a move. I know guys have been thirsting for it. If you think about it, look at this move all the way down into support. You go to your daily chart, and it's something. It's not like, oh my goodness, the trade's back on, the Apple bull market's here. Look what we had here, and everyone gets all excited. I guess I got excited too. It's been a long time. Here is your high in Apple. This is when it broke the 21-day, the 50-day, the 200-day, and you name it. It's just been, a huge decline. We had a few trades along the way. You had a nice red dog reversal right here that gave you 60 to 70 points, but then failed. Then you had a small trade here where it closed in the highs, gapped up, and failed. Then you had this little gap fill, and now look where we are. So here's this small little break. We were targeting this 435 to 437 area, closed above. We'll see what happens. It's about, a week or two since the investor conference last year, right around this time. Tim Cook came out and announced a dividend. Perhaps it's going to happen again. We shall see. Let's hope that, this continues. Otherwise, this 420 support will be null and void. But as of now, it's in the game. We took it home, and hopefully it continues. You look at your 5-minute chart real quickly. You had to really be in your seat and be ready for it. Okay, here is the this small little downtrend that it's been in for multi-days. This is when it woke up around 2:30. You had to be in your seat. Okay, and thank goodness I was there. Otherwise, I would have been a little upset too. So I think most guys started getting involved right around 4:32. I think that's when the virtual trade force saw me get back involved. Then it traded above that 434, and then it held higher. It didn't just come back like it's come back in the past. So we'll see what happens here. We'll see how we open tomorrow, and then we'll revisit then. You go to just say some other stocks real quickly. You go to Google, still, flagging higher. It always is a little upsetting to traders when you open up and you get no follow through, but overall still hangs in very well. I think LinkedIn did the same thing. It pushed a little bit, but wasn't ready. But look where it's come from. So I still think it's fine. Today, I got to give my hats off to Sperling. He finally got his move in BlackBerry. I guess in the morning call I drew this line here, or maybe he did that 1370, 1375, a trade with volume above that, and boom, and there was a nice trade. I missed this, and I can't be in everything. And he, talked to everybody, had big volume, and a lot of guys made some money there. And congratulations, it's a nice trade. See what happens tomorrow. As far as some other things, last week we talked about the gaming stocks and the tight pattern in LVS and Win and maybe MGM. And today they got a little extra attention. I guess they closed on near the lows. But anyway, this was the wedge, and at this point, it's still following this line. It closed relatively weaker, but I still think it's okay. The one thing I will say, it is a laggard type trade. Look where last year's highs are. It's not even close. Nice gap up, to start the year. Wedging, see what happens here. These things have been choppy, not really following through as much. Here again, this is leftovers from morning call talking, and here tried to go again. And this is, I would say probably frustrating, right? If you were playing for a breakout above this 118, it hit as high as 119.28, then closed off the highs. As a trader, I'm there with you guys. I know when I get involved in something that's strong, I like it to make a move up until 11, 12 o'clock, and then break above the morning high somewhere around 2:30, close on the highs of the day, and that's what you call a nice move. Lately, these stocks are not closing near the highs of the day, and it's unfortunate. There are different times when you have to take your trade, otherwise you give a lot of money back, and then all of a sudden a few days later it's higher because the market's trending. So these things are not trading very conducive the way they used to because there's a lack of volume. So with that said, I think you just take less shares and give things more room. Even Facebook, the way it traded today was gross. Went as high as 28.60, near that breakout level, near last week's little high, and then it just failed and looked horrible, and then it bounced back. But overall, you take a look at Facebook, still looks fine. Let me take out this volume here because it skews the chart a little bit. You go right here. All in all, pattern's still intact. There's no real momentum yet. And until there's momentum, until it breaks a level, you got to just stay tight and not have too much size. It looked as if it was going to break above this area, which would have been nice. Again, I keep saying would have in Facebook because it's not giving us the trade that we want. It's still holding in there, still looks good, but at this point it still hasn't taken back the 50-day, so it's fine. Look, let me give you BlackBerry again for an example. You know how many times traders tried to play this move, let me get this out of the way, above 1370? Okay, and it wasn't ready yet. I know I was in there a few times too, and then finally today was a day. A lot of guys that tried it during this mess that added here and didn't get rewarded missed out on today, and today was a day. So the stocks don't know when you play them or you trade them. They go when they're ready to go, and as of right now, here was a nice little wedge. It was coming into support, and they woke up. Whether it's on, whether they were talking about deals with Lavone or whoever it was, I don't even know. All I know is that nice volume, trade through a level. If you took the trade, congrats. If you held a little bit overnight, that's probably what the good book says, and maybe you get a little bit of a follow through tomorrow. Then I know on the pullback side, you can't always find momentum, so you have to look sometimes for pullbacks. We tried eBay today. Still doesn't feel ready. To me, it still feels somewhat broken. It broke this trend line. It broke another trend line up here. So I would just be a bit careful. I didn't take it home long just because it's still not acting great. It's trying to hold bigger support here. So see how it acts from there. I did see another little laggard type trade that might be worth a look. I did buy some Caterpillar today. Here's your lower level wedge type pattern. So with that said, it did break above it, closed okay. You have some support going sideways. There's going to be a lot of resistance in here. So here's this thing, why I think traders are a little frustrated, because you have these leadership stocks that have gone on amazing runs. So it's hard to trust and buy that pullback. But then if you look for a tight pattern in laggard stocks for the market to broaden out, and then all of a sudden some of the steam of the market leaves, those laggard stocks get hit hard, and and then they're the first ones to go down and the trade doesn't work. So it's a very tricky spot. I know last week I tried Schlumberger. I think I got stopped out of the rest of it today. Thought maybe, actually look at this closed okay, but here a mid-level wedge, and just there's not a lot of momentum. It's not a lot of speed there, but again, still hangs around. You know what actually is interesting, because those on the virtual trade floor, you've seen that I've had Ford for like 2 weeks, and the only reason why I was able to hold it, because I didn't have too much size. I added and took off a few times based on the pattern, but I had less size. It didn't bother me. And then all of a sudden, finally, after a lot of back and forth, you look at Ford, it finally gave a tradable day, a day that traders like, not just investors. Right here. It couldn't do it here, couldn't do it here, couldn't do it here, then boom, finally it went. So this was the level that we were talking about and looking for, and he had a nice clean trade. Took a little bit off. I'm still holding some, but overall, Ford, and let's see what GM looks like. Hold on, see if there's a trade there. GM, the pattern is not as good because it wasn't as tight, but it's edging up. It's coming into a bit of a downtrend here, so see what happens there on GM. This actually held the gap, so it looks okay. Toyota was the one I went over my 2013 thesis. Let's see how that's doing. Looking good. If you went long based on this thesis to start the year, it was right around here. So, you know, all in all, doing okay. Here's the old high, so see what happens here in Toyota. The reason why I liked it is because I looked again at the monthly chart, and you had a really nice base here, or a nice channel, and it wound up breaking above it, and now it's holding higher, and who knows, it could continue. Anyway, lots of stuff going on, still various things to do. It was very, you know, ZNGA, let me just put it up because it was funny, we were chuckling on the desk when actually before Apple started to ignite. We're like, you know, this is hard. I'm sitting in a lot of multiple longs and some are going down, some aren't, and there's not a lot of volume. And then someone's like, you know what, Red Dog, all you needed was BlackBerry at 1370 because it had volume, and all you needed was ZNGA because you knew that at 370 it gets into a gap, and both of those were up 8 to 10%. You didn't have to be a brain surgeon looking for where the S&P can go, where your positions are doing. Those were two nice trades. And you look at ZNGA, you know, you look here, go to the daily chart, you can see it a bit more clear, and oh, look at that. This is what I wrote in the morning call. This might have been even last week. So here you go. This was your move off of earnings. Last type of trade that it looked good, your treasures for trash trade. Then it came all the way back down, came back up. This time it held a little higher and then broke out, and now it's in this gap. So people are like, what are you doing with your ZNGA? I took some home because it's in the gap, and you know, I think why can't it get to at least 445-ish? I don't. So there's a decent trade, up what 8-9% today, maybe even more. Lower level, if you didn't get caught in it, that's why I call it a trash for treasures trade, because if you bought it up here and you didn't see that topping tail and didn't get stopped out here or didn't get stopped out there, it's probably in your trash bin. But if you did get out of it and you said, I'm looking for an opportunity into the gap, it turns into your treasure, as if I'm sure you'd love to make 5+% every single day on a particular stock. So anyway, sometimes there are stocks that are breaking out to new highs. Some stocks, they're just active trades, like what the ZNGA could be, or BlackBerry. Who knows if, you know, who cares if the M10 is going to be a blockbuster hit? All I know is that 1370 was a great area, 30% plus float, some volume. Take the trade. Don't ask too many questions. So to close it up, markets went from down to up. Some stocks participated better than others. You still should be in some type of portfolio approach. You don't have to be all in. You definitely shouldn't be all out. You know, keep your hedge on just in case, and just keep making progress. And stop the frustration, and stop looking for a reason to make excuses on why you think you're not performing, and just change what you're doing, and maybe you'll have better results. See you tomorrow. Have a great night.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.